All right, family, could you believe it? Another squeeze video for y'all. So we should call this the squeeze channel at this point. Before I jump into the video, guys, I got to give a huge shout out to the Focus Trades family. So we just officially crossed 400 members, which to me is kind of mind blowing. Kind of crazy, guys. And we started the group a couple of years ago. Didn't really expect for things to grow as fast as they have. And, just the quality of people that we have in the group is amazing. So this weekend, I got to come on the website here and change that to 400 plus members. But we love the living hell out of you guys. We appreciate the heck out of you. Can't thank y'all enough. So with that being said, let's jump into the video now, guys. And if you do want to check out the group at focustrades.com, we would love to have you. So guys, we'll keep this video pretty brief. We're not going to go into detail on the squeeze setup itself because we've got a bunch of videos here on the channel you guys can check out if you want to learn more about the setup and the indicator. And a lot of what we're going to discuss in this video doesn't even so much apply to the squeeze setup, but really any setup at all. So let's start jumping in here, guys. And in my opinion, we can really find consistent trading in 3 simple steps. And for me, this has been the process. Step 1 is to always start with the big picture, which is the major focus of this video. Step 2, identify where the big money is going. Are the big boys on Wall Street buying stocks? Are they selling stocks? Are they doing nothing? We need them to survive. And the third step, guys, is to have a very strict laser focus on trading nothing but your go-to setups. But here's the key. You have got to trade these we've got to trade our go-to setups in alignment with the big picture of the market. Meaning, guys, we always want the wind at our back. So the truth about setups, and this applies to the squeeze and really any setup, is that any setup and strategy is basically useless if it's not traded in alignment with the big picture. Our setups, guys, whatever they may be, squeezes, dips, breakouts, whatever the fuck it is, whatever those setups may be, they're only going to work to the extent that we're taking them in the direction of the big picture, meaning we need the wind at our back. The wind of the overall market momentum, the wind of the big money. The setups, guys, if they're taken in the opposite direction of what the market itself is doing, they're pretty much useless. But what happens is that traders are often going to get frustrated with a setup once it starts going against them. And typically, it's the setup's fault, it's the stock's fault, because it's never our fault as a trader. But here's what I'm talking about, guys, right? Jump into a couple of the charts here. Let's look at last week. So let's look at a couple of squeezes here, and we had some really good looking examples that didn't really unfold that well. So coming into a session here this week, we had a really good looking squeeze on a bunch of different time frames on Google. Now, this video is not to, call anybody out in the group or, to give you guys a hard time. But in the Focus Trades group, the entire focus we have, guys, is getting better. So though some of y'all might be frustrated about a couple of the trades you took this week, that's good news because you can get better and you can learn from it. So we take a setup this week, guys, like this beautiful hourly squeeze here on Google. Now, we've come out of a market environment recently where if you just wait for a lower time frame squeeze on a tech stock and buy some calls, you're basically making money every day. But obviously, the tides have turned here a little bit, but nonetheless, you got a good looking hourly squeeze here on Google, and a lot of folks probably taking that breakout. And then it fails miserably and completely rolls over. You got another example here in Facebook, which, for those of y'all in the group, I do know that a couple of you guys did take this trade, looking to go long Facebook. Now, this is a picture-perfect setup. It was squeezing on the hourly, the 2-hour, the 30-minute. Doesn't get much better looking than that. And you come jumping in here for the move to the upside, and it fails miserably and then completely rolls over. So what we're looking at here, guys, is the 10th, which was Thursday's price action. So here's one of our favorite setups. In stocks that have been super strong as of late, the entire month of August, that's a setup that's probably going to make you money. But as you guys can see, you jump into that hourly squeeze on Facebook on Thursday, it goes ugly, right? You jump into that Google squeeze on Thursday, it's not working out in your favor. So what's going on here, right? For those of y'all in the group and you guys who are watching here right now, the setup, the stock is always going to be secondary. The most important thing, guys, is what is the market, the big picture doing right now? I call the market Big Mama. Whatever Big Mama's doing, we need to follow suit. So what happened here, guys, right? And again, take these mental notes and just simply make adjustments. That's all the game is all about. We got beautiful squeezes. Trading them to the upside failed miserably. And what happened here, guys, it wasn't Google's fault. It wasn't Facebook's fault. It wasn't the stock's fault. It wasn't the squeezes' fault. If you traded those squeezes to the upside, you were ignoring the big picture of the market. You weren't paying attention to what Big Mama was doing, and more importantly, you weren't paying attention to what the big money was doing. You're here trying to go long Facebook, trying to go long Google. You're one of the only people doing that. The big money guys on Thursday was selling. So this is why, before we come into the session, step number 1, big picture context. What's the market doing? Where's the big money been going? Key support, key resistance. And a huge part of it for me, guys, is keeping it very simple. And I like to take a look at where the indexes are in relation to the 21 period EMA. Been a couple of videos putting out about this recently. For y'all in the group, we talk about it every single morning. But the stock market does one of two things, guys. It pushes away from the 21 EMA and then it goes back to it. This applies to a market in an uptrend where we push off the 21 and we come back to it. We push off it, we come back to it over and over and over again. And the rules don't change when we see some momentum to the downside. We push away from the 21 and then we rally back to it. Typically, guys, when the momentum has shifted to the downside and we're underneath the 21, now the 21's pointing to the downside, a lot of these bounces, all right, I had to restart this video here. Things cut out on me. But a lot of times, guys, once the momentum is shifted to the downside, once the market makes a move underneath 21, and once that 21 itself begins to turn to the downside, oftentimes those bounces and those pullbacks, those rips back up to the 21 is nothing but a nice reversion to the mean. Oftentimes we're going to make a move towards that 21 and then get stuffed and roll over again, and then make a move back to the 21 and then get stuffed and roll over again until finally we can begin to close above the moving average and she begins to turn back to the upside. Now, there's nothing, guys, ever guaranteed in the market. Just because we're rallying towards the 21 EMA does not mean we have to get rejected. It doesn't mean that the market is going to stop going higher and immediately start going down, but it's a context thing. As we're trading here on Thursday, like we talked about during the morning live stream, you have got to take into consideration that as everything's pumping here into the open, running right back to that 21, that there's a very good chance we could get rejected there and then begin to roll over. Right? Doesn't have to happen. We can make a move towards that 21, break through and keep on pumping, but context is everything. You need to start with the focus on the market. That way, guys, you're prepared for anything, and then you're taking into consideration risk management, when you want to take entries, and when it's probably a little bit better to avoid trading the upside. So take this into consideration. You're looking at that Facebook hourly squeeze there on Thursday. You're looking at Google. You're looking at Zoom. You're thinking about going long anything, guys, when the entire market is just simply running towards that brick wall. And we know that once we're under the 21, any move back to it can just simply be met with a rejection and then another leg to the downside, oftentimes to go ahead there and break those lows. That's exactly what happened here, team. You have got to start your focus with the big market, because imagine, right? You're there on Thursday, you're seeing all these good-looking long setups, and you're ignoring the fact that the S&P 500 and the Qs are just running right towards the 21. We don't know if we're going to get rejected. We don't know if we're going to continue to rally, but it's the context that matters. And you need to take all the different potential outcomes into consideration. That way you don't get caught by surprise. This is why, I always pound the table, guys, on starting with our focus on the market, because I don't want y'all getting caught off guard. Now look at Facebook too. Start with the big picture. Start with the daily chart, because you're trading that Facebook hourly squeeze there on Thursday, completely ignoring the fact that just like the market itself, what's Facebook doing here? It's making a move back to the 21 where it can easily get rejected. What was Google doing on Thursday? As you're getting caught up in those lower time frames, ignoring the big picture, what's it doing here on the daily chart? Same thing as the rest of the market. Making a move back up to the 21, and then it gets rejected. So as the market itself is making that reversion to the mean back to the 21, we've got to know that we might get rejected here. We might not, but we might. As Facebook and Google are making the same exact move, you've got to know that they might get rejected. Maybe they don't, but they might. But see how easy it is, guys, to lose sight of these big picture things that really matter if you're getting caught up in the chart, the setup, and that one individual stock. Always take a step back, and every evening and every morning before you're starting your process, start here with the big picture. Put together a list of if-then statements. If the indexes rally towards a 21 EMA, we could get rejected. We can also continue to rally, But you need to be making trade decisions and practicing patience, all that good stuff, based upon all the possibilities. So I like to use the brick wall analogy. You can get caught up in the 30-minute chart, you can focus on the hourly chart, but clear as day here, guys, on the daily chart, we come into Thursday's session and we know that both of the indexes and Apple and Amazon and Google and Facebook and everything that a lot of y'all might have been thinking about going long, we're running straight into a brick wall. That's a risky time to be jumping into any setup, never mind the squeeze, looking for a move to the upside. Big picture context is everything. So with this being said, rather than looking at Facebook, rather than looking at Google, rather than looking for long positions, knowing that the potential was in the air for this whole bounce back to the 21 to get rejected and roll right back over, I still focused on squeezes, but I focused on squeezes that I could trade in alignment with the market itself. So that's what gave us, guys, this awesome set of trades here this week in Netflix. It's the same process. We're looking for our go-to setup, which for me and a lot of us in the group is the squeeze, but we're trading it in the direction of the market itself. Not what we want the stock to do, not what we want the market to do, but we're trading it in the direction of the big picture. So, with the context on Thursday that everything's rallying up to the 21, and hey, there's a damn good chance that we're going to get rejected here, we're looking for squeezes, but we're looking for squeezes that potentially we could trade to the downside if the market does in fact get rejected there at the 21. So check out Netflix. As the rest of technology early last week is making a nice bounce back, Netflix has kind of remained ugly here. Just big time rejection under the 8 EMA, under the 21 EMA. You can see both of those moving averages are now turning to the downside. And Thursday we had just a handful of beautiful squeezes setting up on the hourly chart, the 2-hour, the 30-minute, you name it. But nonetheless, guys, right? If we look at the setup right here, let's see, get the 2-hour out. Here we go. Now, not the best looking squeeze, but nonetheless, when you can identify one of your go-to setups, but then you can trade it with the wind at your back, that's where consistency can get created. I love squeezes. I love trading Facebook. I love trading Google. But that big picture context on Thursday told me that that might be an awful idea, considering the indexes and Facebook and Google are simply running right towards a brick wall where they might get knocked on their ass, and it's exactly what happened. But with that context and knowing that, hey, the market might get its ass handed to it here if it does hit the 21 and fail, perfect. We know a rejection might happen, and we know the selling pressure can really get heavy if a rejection does happen, so let's find a squeeze that we can trade to the downside in the event the market does get rejected here. A plus B equals C. Where's the market in relation to the 21? What is the big money doing? Find your go-to setups and trade them accordingly. So that's what gave us, guys, this beautiful flush here right into the close on Thursday on Netflix. Trading our go-to setup, just like that squeeze on Facebook, just like that squeeze on Google. All three of them are squeezes. Two of them failed miserably if you try going long or going against the market. One turned out to be just picture perfect A-plus opportunity if you traded it with the wind at your back. So I know this is a lot to think about, guys, especially if you're newer to trading, but kind of keep it simple. Our setups are strategies that are only going to work to the extent that you got the wind of the big money behind you. So start every single session, guys, first and foremost with the market. And for me, it's just a simple conversation of where are we in relation to that 21 period simple moving average? Are we super extended to it, from it to the upside? Are we super extended to the downside? But I'm always starting every morning looking at nothing but the indexes, and then I go from there. So Thursday, guys, it's a really simple thought process. Hey team, the market is strong here this morning. Everything is gapping up, but hold on. We're gapping up towards that 21 where we might get knocked on our ass. We might. We're just taking everything into consideration, finding our go-to setups, and then here's the big key. Wait for confirmation. If you're looking for longs on Thursday, my mindset is give this thing time. Let it prove itself that it can make a sustainable move above the 21, and then maybe even then you want to be a little bit patient. But human emotions take control. A lot of traders wake up on Thursday, they see the market bouncing, they don't want to miss the rally back to the all-time highs, so you're blindly jumping in here. Because that Facebook squeeze always works, that Google squeeze always works, but it's just not the truth. They only work to the extent that you're trading it in alignment with the big picture of the market itself. That's my process every morning, guys. So Thursday, hey team, we're going up towards a 21. Before we jump into long positions, let's just wait and see if we do in fact get stuffed and rejected. We waited for the confirmation. The confirmation was that we did get rejected and began to roll over. Perfect. Now we got a clear move for the market. Let's go find one of our go-to setups and trade it accordingly. That made Netflix such an awesome trade this week. So hopefully this makes sense to you guys, and I do want to do a couple more videos talking about kind of the mindset, not behind just trading the squeeze, but the whole kind of daily preparation of, starting with the market, where's the big money going, our go-to setups, and then putting it all together and trading them accordingly. So hopefully this video shed a little bit of light on some frustration I know some of y'all had this week. And as always, guys, I'm here to help. So if you haven't already, go ahead and click that subscribe button. I appreciate the heck out of you guys. You can check us out at focustrades.com. And I hope you guys have a good weekend. Don't do anything I wouldn't do. And I'll talk to y'all soon.